Okay, so on this video, I am going to discuss very honestly with you why I have invested almost 85 lakhs on these 4 stocks. Now, I started making this investment a few months back and I have been ramping up this investment. This is 85 lakhs that you see from one of my portfolio. The amount is higher. Since I can't give you proof of that, this is the proof that I'm giving that I've invested 85 lakhs in these 4 stocks. Now, I can hear a lot of clicking noises. People will say that, you know what, why are you showcasing wealth? Why are you investing so much high amount? This, that. See folks, point number 1 is that this is not as if that I'm trying to tell you that go and pour all your money into this. I am also well diversified. I never invest more than 3% to 5% of my portfolio in any single stock. Okay, that's one. So even if the amount looks big, please do your own adjustment. If you're looking to invest in these companies, put like little bit of money, keep ramping up. That's what I'm going to say about the investment capital. You can choose to invest whatever investment capital you are okay with, right? Be diversified. Even I am diversified in terms of investing this stock. It's not as if that I have invested all my money in this stock just because the amount looks to be 85 lakhs. Okay, please don't get me wrong there. Now, let's get on with the video and I'm going to discuss 5 very important points along this video. This is going to be a fascinating, very good video. Please watch it till the very end. You will understand a lot of things about how to do business analysis, technical analysis, fundamental analysis of really strong companies. Final 2 points before I kickstart this. You can check the small case that I have made. The link is in the description box of all the previous small cases and this new small case, which I am terming as Akshat's Great Indian Monopolies. Why? Because I feel that India is a fairly new country. Monopolies will be created in India also. They are already being created. So I feel that these 4 companies or the HDFC group can actually become a monopoly in India. When I say monopoly, don't get into the argument that, you know what, not owning 100% of the business, nothing like that. By monopoly, I mean that these are really good companies that can actually become really big in India. And I'm going to explain you the reasons also. That's one. Second point, there are a lot of scammers. Please be aware, I can't manually delete all these scammers. Unfortunately, I've tried doing it. I've tried really doing it. A lot of you are messaging me that there are so many scammers that are showing up. A lot of scammers that are showing up, they are giving their phone number, this, that. Please don't give your phone numbers and interact with them. That's all I can say. They use bots and I can't manually block all of them. Also, press the like button, helps with the YouTube algorithm. It encourages me to make more similar videos. Please do it. Please do it now. Okay, let's get started. This is the trivia question for today, that what do you think? What is the competitive advantage of companies like Apple or Amazon? Try commenting it, right? I'll explain the answer here also and I will add additional details to my answer in the comment section, in the description and the pinned comments. But do give your answer. So the answer is very simple, that Apple and Amazon are monopolies, somewhat monopolies, and they are playing something called as the ecosystem game. Okay, what is ecosystem game? Ecosystem game simply means that, hey, if this is a MacBook Air, which I have, if I have an iPhone through which I am shooting, if I have an iPad Pro, which I am taking my notes on, then there is an ecosystem of these different devices. You can switch between each other easily. That is the ecosystem play. Similarly, Amazon is also building an ecosystem play, which is Amazon Prime. Then you have Amazon Delivery, whatnot, right? So Amazon website, Amazon Prime, free and fast delivery, this, that. That's again an ecosystem. So many people assume that, hey, you know what, Akshat, that Apple is a very big company and it's a monopoly because they churn out the best products. Yes, partly true, but that is not the point. The point is that you get power by building ecosystems. For example, I am having a supremely hard time switching out of the Apple system. I don't think I can switch anymore. These people can keep on increasing the prices and I, like a crazy customer, will keep on buying their products. Why? Because I'm helpless, because I'm so dependent on that entire ecosystem. If I have an Apple smartwatch, for example, if I don't own an iPhone, I can't use it. I can't extract value out of it. So this is a very powerful, intuitive concept that you need to understand before I delve deeper into these 5 points that I'm going to explain it to you about the HDFC group. And then only you will understand my logic of investing so much money in this group and why am I super bullish about these companies. Along the video, I'm also going to help you understand whether or not you should be investing in these companies as of now. So please watch the video carefully. Otherwise, you guys skip half the video, understand half the concepts and then make losses in the stock market. So please watch the entire video. So point number 1 is that why have I invested so much money in these stocks? Of course, the fundamentals are good. All that stuff, we are going to speak about it. But the first core fundamental point is that this aligns with my investment philosophy. Now, what do I mean by investment philosophy? Now, there are different types of investments that you can make. And typically, there are 3 different types of investments that you can make. The first investment type is something called as defensive investments. So for example, if you're putting your money in an FD, then what are you doing? You're just trying to protect your money. Similarly, if you are putting your money in gold, what are you trying to do? You're trying to protect your money. That's it, right? So you're not looking to grow that money. So I am not a defensive investor. So that's one. Second is that you're looking for growth, but you're looking for risk-adjusted growth. Now there is something called as Sharpe ratio. I will not get into the technicalities on it on a short YouTube video, but I'll explain it to you in a very easy to understand manner. So let me explain this concept of Sharpe ratio by giving you an example. So let's say that you have two choices to make, right? So there is choice A and there is choice B. Choice A is that, hey, you will get like 15% return by investing in a small cap stock. And second is option B, where you will get 15% return by investing in something like HDFC Bank, right? So which option will you pick? If you are a rational person, you will of course pick option B, right? Almost all of us will pick option B. Tell me in the comment section if someone will pick option A, right? So why? Because this looks less risky. I'm taking less risk, making equal amount of money. So this is what Sharpe ratio indicates. So coming back to the point that what type of investments do I want to make? So I want to make investments where the risk profile is low, but the returns are relatively high and they are geared towards growth. This is where this group comes into the picture, and I feel that this group is relatively safe and is likely to give you high returns. There are no guarantees. This is not an investment advice, but this is the philosophy with which I'm making the investment. Now, the third type of investments are called as speculative investments. Now, I know a lot of you will start jumping that, hey, you know what, speculative investments, Bitcoin, this, that. No. Now, there is something that I posted on Twitter. Please check the link in the description box about that thread. Please go and read it. You will understand more about speculation, what speculation actually is and how it is being played out in the current world. I'll make a separate video on that. So I hope this first point is clear, that I am investing for growth in what type of assets, which are relatively less risky assets, but with great growth potential. So which brings us to point number 2, that why do I feel that HDFC as a group has great growth potential? So let me first and foremost take you to Wikipedia and let me highlight some of the key points about the HDFC group. Now, first thing that you will notice is that HDFC has a bunch of subsidiaries, right? So there is HDFC Ergo, there is HDFC Life, there is HDFC Mutual Funds, this, that. If you take a look at major subsidiaries and associates, you will see that HDFC Bank or HDFC AMC is also a subsidiary of HDFC, which is Housing Development Finance Corporation. So this particular company has investments, or is the holding company, so to say, of many strong names. HDFC Bank, HDFC AMC, life insurance, etc., etc., right? So this has a combination of different companies. So important point for you to note as an investor is, this is a diversified business in the finance sector, right? This is a diversified business in the finance sector. They have diversified almost everywhere, which I'll show it to you in a minute, right? That's the first key thing, that this is a well-diversified business. The second key point that you need to notice is that they are building an ecosystem, right? So I was talking about Apple and Amazon building an ecosystem. They are building a finance ecosystem by owning companies like asset management companies, insurance, right? They own a bank and bunch of different things that I will show you in a minute. That's the second key point that you need to recall. Third is the growth potential. Now, of course, I will show you the analysis of HDFC Bank also, that why is it likely to grow. But the important point for you to know is that growth happens where, right? Growth happens in a baby. For example, Zain, my son, he will gain more height in the next 5 years compared to me, right? I'm already like 33. What height will I gain, right? My height will probably decrease with age, but Zain's height will increase with age. So the point is that growth happens in babies. Similarly, in businesses, that growth happens in small, fundamentally strong businesses first. So with that said, let me take you through some of the key points around HDFC. You might not have heard of companies like GR, UH Finance, HDFC Property Fund, HDFC Red, HDFC Credila Financial Services. And these are somewhat newer companies which have great potential to grow. For example, if you take a look at GRHU Finance, this business is still getting restructured. If you look at Property Fund, it's just like 15-20 year old fund. If you take a look at HDFC Red, it launched in 2010. The point that I'm trying to make here is that forget about the core companies like HDFC Bank, HDFC AMC. Those have already become big. But even these new companies have great growth potential. So these are 3 specific points that I want you to remember, that HDFC is a very well diversified group. Number 2, it already has very strong companies in the portfolio portfolio like HDFC Bank, HDFC AMC, bunch of other different things. Third, it has something of a growth mix into the picture by owning these relatively new businesses which are likely to grow. To package all these 3 points, they are doing an ecosystem play. They are present everywhere. They are going to be present in the financial sector in India even 20, 25, 30, 40 years from now also. So here is the central point about this entire discussion, that hey, if you are investing for 30 years or 40 years in India, which is one group where I would want to put my money, this is HDFC, plain and simple. That is what I would do. This is the reason why I've invested 85 lakhs in some of the stable companies of the HDFC group. So this brings me to the third point, that let us analyze some of the stable companies for HDFC group. So the most famous company of the HDFC group is the HDFC Bank, and I think this is the backbone of the HDFC group, and this will continue to be the backbone of the HDFC group. Now, I don't need to talk too much about the HDFC Bank per se. I can probably make a separate video on HDFC, but there are some very unique points about the HDFC Bank that all of us should be aware as investors. So if you actually take a look at financing profit, right? So if you take a look at the balance sheet, you will say that, okay, in 2010, it was 16,000 crores. Now it's 128,000 crore, massive growth, impressed. Financing profit, 610. Now it's 14,433, impressed. Now there are a couple of points that you need to notice, that financing profit for HDFC Bank has never been negative. Take a look at any bank. For example, let's take a look at something like ICICI, right? Which is usually considered to be the number 2, 3 bank. Let's take a look at ICICI Bank, and here you will see financing profit being negative. Okay, let me name another bank that I should look at. Okay, let's take a look at SBI. Okay, our favorite bank. So SBI, State Bank of India. Okay. So if you take a look at State Bank of India, again, like almost negative every single time. Since we are on SBI, here is a joke for you. Why do you think the financing profit for SBI is always negative? So you need to understand what financing profit is. Financing profit literally means that, hey, I'm going and giving SBI 100 rupees. Then they take that 100 rupees and lend it out to someone and make 120 rupees. So they are keeping a profit of 20, right? So they are not being able to do it profitably as of now. Why does that happen at SBI? Probably because when you are going at 11 AM to deposit your money at SBI, employees are going for lunchtime. If you have to take a loan from the manager, probably he's on lunch. Okay, bad joke on SBI, but moving on. I hope you get the picture that HDFC Bank is probably the only bank in India that knows how to lend money profitably, and it can make money from money. This is a massive thing, and that is the reason why that HDFC has grown at such a massive rate. Now, I have already invested in HDFC. I have made several videos on it. I advised in my previous video also to invest in HDFC. Now, if you have missed that rally, it has already shown that improvement. If we take a look, right, it's already trading at approximately 1600. Minimum, it will reach 1660 for sure, right? It will go even beyond that. Now, you would say that, okay, Akshat, now why do you think that it will go beyond 1660? So, okay, now here are some key trends, right? Key trends that you need to know in the banking sector. There are multiple, but I'll recap some important things here and link a video that I had done earlier. So one key trend that you need to understand is that even before going into that. So let me explain you how profits are made, right? So profits are what? Revenues minus cost, right? What is revenues? Revenues is price time quantity, right? That HDFC Bank might be selling a lot of products, lot of different types of products. It is selling it at a certain price times the number of quantity or units that they are selling. And cost we all understand. So let us not talk about cost, because as we understand that as HDFC expands more and more, it is already a very efficient bank. So cost wise, it is already doing well. Now the industry trend is that what is happening right now is that, of course, there are like 2-3 things that will happen. One is that this queue or number of people interacting with the banking services, this will go up. Right? It will go up easily. Why? Because the banking penetration in India is still very low. And HDFC Bank is reaching everywhere. So almost all the banks are likely to grow. This is common logic, right? There is nothing new that I have told you. But this is where the magic happens, right? Right now what happens is that basically if you are going to your bank, what are you doing, right? You are essentially saying that 100 rupees, you deposit your 100 rupees, banks forwards this. Every month you are getting a salary of, let's say, 20,000 rupees. It hits your bank account and bank lends it, right? So bank is making money in terms of charging commissions in between. that they are taking money from you, paying you only 3%, but when they are giving out home loans or car loans, they are charging 8 to 12%. So that is how banks make money. Now this is the traditional model, and this model is getting disrupted. Why? Because up until now, what used to happen was that you get 20,000 rupees as salary, you go and deposit that, or it automatically hits your bank account and you're done. You're not engaging with your bank further. Now there is a concept called as neobanks. So neobanks means these are new age banks. Now you might have also noticed you have a very hard time keeping a track of your expenses, right? That money is hitting your account, then you undertake like expenses randomly, and then whatever money is saved towards the end of the month, you go and invest it. So essentially what I'm trying to say is, so right now the way we keep a track of our money, that is really poorly done. So neobanks are changing this phenomena. They are partnering up with different banks, and what will happen is, by using these neobanking apps, you can track your money better, right? You can set specific goals, right? You can do other bunch of good things, right? So essentially these neobanks will help you track your money better. They are operating in partnership with these credible banks like HDFC and bunch of other different banks. So essentially what this phenomena is going to do is that it is going to increase the frequency with which you interact with your banks. There will be new products that will come up. So this price time queue, this will increase massively, right? This will increase massively, and there will be PE ratio expansions of good banks, right? So this is the essence of the discussion. I know I might have made it a little bit technical. If you want me to make a separate video on neobanks, do comment. I'll make a separate video on it. But this is the basic analysis that you must believe in order for you to invest in banks. And HDFC Bank happens to be the best in the lot. Therefore, I have bet a lot of my money, a lot of my family's money on HDFC Bank. Now, your next question would be that, hey Akshat, okay, great. You know what? You invested your money. We are still sitting at Nifty 17,300. We have not invested in HDFC Bank. Should I still do it? So, okay. So here are the facts that see currently. So previous high was 1641. We haven't even hit the previous high yet. Little bit of profit to be made, but I want to show you something really cool, right? So let me take you to US banks. Okay. So let me show you some US banks, and also comment if you want me to make videos on US stock investing. I've recently started it, so I'll make some videos on that as well. So if you take a look at Goldman Sachs, which is one of the top banks, right, in the US. So let's take a look and let's look at its financials. Okay. Now do you see, right, before coronavirus, this bank was trading at $238, right? Now it has almost doubled, right? So that's one, right? Now you will say that, okay, Akshat, this is an anomaly. So, okay, let's go with JP Morgan. So same scenario that before the coronavirus pandemic, this bank was trading at 135.64. It is trading at 160, right? So still decent growth. So the point that I'm trying to tell you is very simple, that if you take a look at HDFC Bank, it hasn't even cut its previous peak. Banks in the West have shown massive profitability. Why? Because of pandemic. A lot of money flows out of emerging markets like India, and they flow to stable economies like the US. When we go through a bull run phase, which I'm betting on, this bank price will at least go up 30-40% from its previous peak. So this is what I'm betting on as a macro investor. I'm a macro investor. So this is what I'm betting on given all the financial information. Now let me also quickly discuss about HDFC Life. Now there are many points that I can discuss, but let me discuss the two most important points. One is that the insurance industry in India recently got deregulated. So which is a great sign for the entire insurance industry, and the insurance stocks will go up. I had already given you recommendations that I have invested money in ICICI GI. Please watch that video. In case you have watched it, please comment that I did say that or not, right? So I had invested money then, showed you money investing also, and I had also invested on HDFC Life. Now that is the first key trend, that the insurance industry in India is getting deregulated. Second is that insurance industry in India is likely to become supremely profitable. I am regretting a little bit that I only invested a little bit of amount in HDFC Life. I should have invested more, and I probably will look for opportunities to invest more. Now here is a report by Deloitte. It simply says that in the emerging economies like India, the growth forecast on premiums is 7%, right? This has not happened. So this is post-pandemic. That's part A. So which means that if insurance companies are going to charge higher premiums, then that same price times quantity equation will play out, right? That price of selling insurance will go up, right? So the companies become profitable, and Q will anyways go up because of the pandemic. This is already going up. That's the first part of the entire equation. What people usually miss is healthcare cost in India is going up massively. It is going up like crazy. In the US, if you compare, even now, despite it becoming a mature market, the healthcare premiums are going like skyrocket. They go up by 10% premium every year, which is massive. This is extreme high rocketing of price in the health sector. Why is that happening? Because healthcare in general in the US was very expensive to begin with, and it is still getting more and more expensive. Now, with that, what do you think the trend will play out in India? The healthcare in India will also become very expensive, and that will further lead to profitability of these type of insurance companies. So let me talk about the fifth point and then I will close out the video. Fifth point is the asset management company, which is called as HDFC AMC. I'm super bullish about HDFC AMC. Now why? And this is something that I've recommended earlier also to all of you to do, that hey, go invest in AMC stocks. Now this is the latest article. It was released on September 1. Zerodha gets in principle approval for mutual fund businesses. Now AMC are asset management companies. These are mutual fund companies. Whenever you buy a mutual fund, you do it through Nippon Asset Management or HDFC and bunch of different companies. Now this sector is so profitable that even big unicorns or startup unicorns like Zerodha have gotten into mutual fund industry. There is a company called as Navi, which is backed by Sachin Bansal. It has gotten into mutual fund industry. So the point is that this industry is massively profitable. Smart people are realizing it. This is where even your money should flow. And this is precisely the reason why I've invested so much money. Now I can build a separate video on it. I can do complete analysis, but I just wanted to point out these 2-3 key things and key updates so that in case you are interested in investing in these stocks, do it. Final inputs from my side that if you're looking to do it now, the prices are slightly high in this point in time. So if you're looking to play short-term game, okay, wait, see and look for correction. If you are investing like me for 20-30 years in this group, go ahead and do it. No problem at all. Do it tomorrow. Not an issue. If you feel a little bit iffy in terms of buying the stocks directly, then I've created a small case of great monopolies in India. I will keep adding more stocks to this particular small case. So please check it out and start your investing journey. So I hope you enjoyed the video. Give it a thumbs up and a like. Let me know in the comment section what did you think about the video. It will make me super happy. I would love to interact with you and I will see you the next time.